Good morning, everybody. Welcome to pre-market news and views for Wednesday, April 27th. There's a lot to cover in this market, and let's go right to the charts. We'll start off with the futures here, which put a little bit of a high in right around 7 a.m. They pulled back a little bit, and they're just getting a little uptick as the dollar moves lower. So every time the dollar moves down, it looks like the market moves higher. Take a look at this chart right here. You'll see how the U.S. dollar index right around 7:30 caught a little bit of a bid higher, and the futures come down. Now the dollar is moving lower, and we'll probably go back and click, and you could see how the market is moving higher. Okay, so that inverse relationship between the U.S. dollar index and the ES futures and all the other major stock indexes will trade inverse to the market. Okay, so 7 o'clock there was a little mortgage data out. The number came in a little bit worse than expected, and the market did take a little bit of a dip from their early morning highs. But nonetheless, futures are up 4 points to 13.45 per contract, and still a decent little move. Really, news has very, very little effect these days. It's more about the action in the U.S. dollar index. I do want to take a quick glance at the U.S. dollar index from afar, and everyone can see what I'm talking about. If we just go to a daily chart, you'll see the breakdown that has happened here. What I'm going to do now is just go to a weekly chart, and you can see how the U.S. dollar index put a high in June 7th, 2010 at 88.70. Today it's trading down to 73.77. That's about a 17% decline. If we also zoom in a little bit, you're going to see that this right here was the November low, and we are breaking below that level. So we are below that level, and we'll see where we close at the end of the week. One thing I want to say about the dollar, though, it is very, very oversold. However, I don't see any formation here telling me that it's ready to bounce yet. So something we'll have to keep a close eye on, and we'll watch. If the dollar does get a bid, I do think that will take steam out of the commodity markets, and I also believe that that will take steam out of the equity markets, because this is a perfect inverse relationship. When the dollar falls, the market simply inflates off the Ben Bernanke project. Okay, so again, as traders, we really don't care what goes on. We just want to be on the right side of the trade at the right time, and that's really all that matters. At this time, the dollar is still weak, still falling, and you could see things like the FXE, which is the euro currency, have had just the opposite move. So very, very strong move. This is a weekly chart as well, and you can see how that has moved up sharply almost on a daily basis with some small pullbacks in between. But tremendous move on the euro just because the dollar is so weak. So let's keep that in perspective. But always, 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 especially commodities traders, people that are playing energy stocks, you must watch the dollar at all time. It's very, very important. And the dollar, again, breaking down today, it is still trading lower by about 5 cents at the moment, despite this little green uptick bar from the low of the day. It has had a move off the low of the day, but still negative by about 5 cents. What happens a lot of times with the dollar is, just say the dollar rallies up a little bit. When the opening bell rings at 9:30 a.m. at the New York Stock Exchange, the dollar will fall, and then you'll get another rally in the stock market. Now today we have the FOMC meeting taking place, and Ben Bernanke will announce his interest rate policy, and then at 2:15 this afternoon he is going to hold a press conference with writers and people in the media, and they're going to be able to ask him questions. This is a first ever press conference of this nature for the Federal Reserve. Now, I happen to think Ron Paul has put a lot of pressure on them recently, and I think they're trying to be a little bit more transparent. But he has to honestly answer questions about the dollar. He has to honestly answer questions about inflation. Everybody knows the high gasoline prices that we're paying out there. I mean, it has gotten a little bit out of control. I mean, even today you have oil up, just basically 10-15 cents at the moment, but it's still $112 oil. If we take a look at the UGA, which is gasoline, the United States Gasoline Fund, I'm just going to use this as a barometer, you're going to see we're at a new high. Now, if we just zoom in a little bit, right here was QE2. This is exactly the date QE2 was announced. And it looks like the price for UGA, which is United States Gasoline Fund, was at $29, just say $30, rounded off. We are now at $54. So you're going to tell me that the Federal Reserve is saying there's no inflation. look at the price of gasoline. It is all inflated due to QE2. Now, sure, the Middle East problems don't help, but you haven't seen the problems in the Middle East have just gotten worse day by day, and you have not seen oil go any higher. Okay, so that tells us really oil is taking its lead. Oil, gasoline, gold, silver, all from the US dollar index. Okay, let's take a look at the GLD. It's very, very important. We're going to use this as a gold barometer today. But here you can see that daily chart, we're at new historic highs for GLD. Sure, we got a little bit of a pullback there, maybe a little bit of a pause. But what a move it has been. It has been a tremendous, tremendous rally. Okay, so this is all telling you gold and silver, I believe, are the Federal Reserve's worst nightmare. And it's telling you that they're just continuing to create these cash reserves, and that is inflating the market. I'm sure most of you know that already. Okay, I do want to cover just a little bit more here. Again, that Fed meeting is going to be very, very important. You're also going to have inventory, crude inventory is released at 10:30. That could cause a little gyration in the oil market. I think right now the dollar is the leading catalyst when it comes to oil, though. And if the dollar falls, you could watch for a little bit of a bid in oil. If we take a look at a USO chart, which we'll use for an oil barometer, and it's very, very good to use intraday, you'll see that we're right up at the old highs here. We haven't gotten through them. Until we get through them, don't expect a breakout. You need to get through them and close above them. Then you could probably look for a breakout to occur in oil. And I wouldn't be surprised to see oil go up to 50, or the USO rather, to go up to around the $50 range. I think that's still within grasp here if it could break out. But until it breaks out, don't assume that it's going to just break out. Okay? We also have some earnings that were released last night. Very, very important. I'm just going to go over a few big names. One of them is Boeing. And let me just get that intraday data so we can see where Boeing is. And Boeing is trading up a little bit there. Yesterday closed at 75.55. Today it's trading up around 75.90. I believe Hess came out with earnings as well. And you'll see that stock is trading up to 83.50. And then you also have Merck, which did a $5 billion buyback. Let's take a look at that one. Yeah, Merck is coming off the highs a little bit, but still trading higher. I'm not sure if Merck is really ready to bust out anywhere significantly. It's right into the 200 moving average. That's where it was a little over a week ago. And until it can really get through there, I think this 35 level, give or take 25, 30 cents is going to be pretty good resistance. You also have a big, big gap area just a little bit higher, right around 35.75. So I'm not sure Merck is really ready to make them run. Now, one thing I've noticed that a lot of people have talked about, this inverse head and shoulder pattern. To me, this is an invalid neckline. You can't have necklines that are running ascending or running higher. So in my book, this looks like an invalid neckline. I think there's still a fair amount of resistance here. Maybe the market trades at 13.50, 13.55 after the Fed, but I'm not sure it's sustainable and it's ready to break out just yet. So be a little bit cautious on that, okay? And that's something everybody should watch closely. I believe Johnson & Johnson also made a purchase today, and the stock is being hit a little bit. I think they did buy a company this morning. So anytime a company makes an acquisition, just realize that stock is likely to be under pressure for a little while. But I don't think it's really anything to get worried about. Johnson & Johnson has had a tremendous run lately, a pretty big breakout, and now it's pulling back a little bit on an acquisition. So I wouldn't look at that really too negatively. It's just something that you just must be aware of whenever there's a little bit of a buyout a buyout that takes place. Let's look at Amazon real quick. Amazon is coming under a little bit of pressure this morning, but nothing too bad. Yesterday they reported earnings after the bell. The stock did sell off all the way down to the 171 level, has since bounced back, and today trading right at 180-160. So again, Amazon is holding steady Eddie at the moment, and can't make too much out of Amazon at this time. Okay, so as we depart this morning, just realize that you want to watch the US dollar index. Futures are trading up a little bit more. They are starting to move higher as the US dollar index moves lower, and I'll just show you that US dollar index again. And you can see As soon as that starts to trickle down, the market inflates, and the inverse relationship is very, very much intact. Okay, everybody, watch for the Ben Bernanke project. That'll be released at 12:30, interest rate policy. I believe the press conference is at 2:15. Notice how the Fed is going to release the number earlier and then wait a couple hours, see the market's reaction, and then they're going to come in with that press conference. So we'll see how that goes, and we'll see if the media has the guts to ask the tough questions. Okay, everyone, take care. Enjoy the day. Come visit us in the chat room, and come visit us in the research center. And there's a lot of free stuff on the website. Visit us at In the Money Stocks. I'm Nick Santiago, and I'll see you all tomorrow. Have a great day.